Good morning and welcome to the Business Lens on Rapid Television Abuja. It is great to have you with us on this edition where we look at how all the numbers and figures directly affect you and your businesses. My name is Divine Alex. So let's begin with the key business trends that matter right now, starting from the headlines. Nigeria has increased its domestic gas price to $2.18 per MMBTU from 2.13 cents dollar, with commercial users now paying 2.68 dollars as regulators move further toward a market-based pricing system under the Petroleum Industry Act, which is a shift that could raise costs for industries and potentially feed into electricity and manufacturing prices. And with gas accounting for nearly 70% of Nigeria's power generation, this price increase could have a ripple effect, whether negative or positive, across electricity tariffs, production costs, and ultimately consumer prices. The next says the electricity regulator is pushing to fast-track meter installations across Nigeria to close a gap affecting over 6 million unmetered customers, aiming to eliminate estimated billing, improve transparency, and enforce the rollout of free meters under the World Bank-backed program, even as this could raise concerns over long-term cost recovery. While the push for free meters could improve billing transparency, the bigger question remains: who ultimately bears the cost, and will it translate into better electricity supply for Nigerians? To the next story that says VAT allocations to Nigerian states surged by 74% to 423.25 billion naira in January 2026, with Lagos leading at over 50 billion naira net, as improved tax collection and improved economic activity boosted revenues across all states, while states are receiving more revenue. The big question is, will this translate into better infrastructure, better services, and real impact for the citizens of Nigeria? We move to the next one that says Nigeria needs about $14 billion every year to close its infrastructure gaps, with the government now shifting focus toward private capital and innovative financing to drive growth, boost productivity, and support a population growing at nearly 3% annually. When you connect this to the over $100 billion needed in the power sector alone, it raises a bigger question: where exactly will all this funding come from, and how fast can it be deployed? Now, away from that story, we head to the next one that says Nigeria's economy continued to expand in March, with the PMI at 53.2 points, marking 16 straight months of growth as 31 out of 36 sectors improved, although the pace of expansion slowed slightly amid ongoing inflation and cost pressures. The economy is technically growing. The real question is, again, are businesses and households actually feeling this growth, or is it just numbers on paper? Now let's head to the federal government that is set to disburse over 1 billion naira to small businesses under the 2026 National MSME Awards, shifting focus from fiscal prizes to direct funding, mentorship, and market access to help entrepreneurs scale and create jobs. But beyond the headlines, like I said, another question: will this initiative like this truly reach the average small business owner, or remain limited in impact? Now let's go to the banking sector, where Nigeria's banking sector has crossed a major milestone, with 33 banks meeting recapitalization targets and raising 4.65 trillion naira, pushing capital levels above global benchmarks and strengthening the system's ability to support economic growth and withstand shocks. With stronger banks and more capital in the system, the key question remains, again: will this translate into real credit for businesses and economic growth? We'll be looking at those stories and more after the break. Please stay with us. Okay, you're welcome back. This is still the Business Lens on Rapid Television Abuja. My name is Divine Alex. And now let's go over a little bit review on the headline stories before I give you what we have for you today. Because today, like I said, is going to be a special edition, because you are definitely going to go home with some things jotted down somewhere. Now, when you look at all the stories together from banks raising trillions to government, launching billions naira funds to growth, numbers improving, you'd expect things to be getting easier for everyday Nigerians. But that's not exactly the reality, right? We still have power that is still unstable, fuel prices are still, volatile, businesses are struggling to access credit, and even farmers are losing income. So the big question will be, where is the disconnect? So we are going to be breaking this down. And I have with me an investment analyst, Kelvin Ehalufo. I hope I did not murder that name. So we'll be having this conversation with him. Good morning, and thank you for being on the show today. It's great to have you here.
Good morning. Thank you for having me.
Okay, so I want us to go over some of the headlines that I dropped, and let's start with the PMI that went up to 53.2, capital inflows also rising, and banks raising over 4.66 trillion naira. But many Nigerians are still struggling financially. Now, why do you think this is like this? And then why is economic growth not translating into real life relief?
There are a number of things happening at the same time. PMI is increased from 51.9 to 53.2. I would say one of the reasons is we've had capacity that was lying fallow, basically. Factories that were not operating at full capacity. One, the scarcity of dollars that we used to have previous years. Also, when you look at challenges with financing, the high cost of lending, going to the banks right now, you get credit facilities above 35%. It was restrictive for business owners to be able to expand, import raw materials to do their production. Mm-hmm. Now, in February, the Monetary Policy Committee of the Central Bank cut the MPR rate, which is the headline rate that guides the lending rates for banks, from 27.5 to 27%. So that 0.5% might look small, but for a business owner, it's quite significant
for them.
Yeah, so now some banks feel maybe their margins it would be easy for them to produce if they borrow at that rate now. So there's that slight improvement. Also, FX availability has also improved. Okay. And it's also been helped with unfortunately, with the US-Iran war. Okay. The price of international oil has gone up. Okay. And with that increase, there's more FX coming into the economy, which means producers, manufacturers can access more FX to import raw materials, import machinery, and things like that.
Okay. Now, there's a strong capital inflow into banks, over 13.5 billion, yet SMEs still get just 1% of total credit. What exactly, or where exactly do you think this money is going?
The challenge is, I used to be a banker and I know a bit about this. Okay. So if you look at the way commercial banks are set up, they are not particularly structured or best suited for the small micro businesses, the SMEs. Okay. Maybe for the medium-sized businesses and for the larger businesses, they are more well structured. So you find that a lot of the small businesses are not even registered. They don't keep their books. They have that challenge of accountability. Oh, okay. And banks only lend to entities that you can see the track record. They have audited accounts maybe for the last 3 years. They pay their taxes. They are well structured. There's a board. There's corporate governance. But you find that a lot of our businesses here, the mom and pop shop, our mommies who sell in the market, they're not registered. Even the local maybe pharmacy by the corner is not registered. He doesn't keep his books. So it's difficult for commercial banks to lend to them because they are considered high-risk businesses.
Okay.
Now, that is where the gap where the microfinance businesses or banks play. They are more adept. They are able to go in from day to day, check the books, even help them, guide them, and all of that. But commercial banks relatively consider those businesses a bit too risky. And when you find that you can lend to government through treasury bills, you buy treasury bills as a banker, the treasury of a bank would find it easy to take the risk with zero risk, lend to government, and earn maybe 16, 17, 18% risk-free money. So it's a no-brainer. Most of them put more than 50% or close to 50% of the depositors' funds into treasuries.
Okay.
And also, don't forget, under the current regulatory regime, there is restriction on amounts we can lend as a bank. So you have your liquidity ratio, you have your cash reserve ratio that is extremely high, at about 45%. So it simply means of all the deposit a bank has, no matter the figures you're rolling out, 45% of that is kept with the central bank. And you only left with 55%. Now, out of that 55%, there's still some portions that are still restricted. So at the end of the day, maybe a bank has only 40% or 50% of its depositors' funds to be able to lend to the markets, and it has to make profits. Then it looks at the risk of giving out this money and that money not coming back. So he then decides to say, okay, let's go with the easier path. Lend to government, buy treasury bills, and maybe 16, 17, 18, 15% thereabout. Then the remaining portion, look at the very big businesses that are, quote and unquote, too big to fail.
Too big to fail.
So they look at the Dangotes, the Boa Cements, the MTNs of this world, the big names, and they lend to them.
Okay, now we have the federal government, opening up our application on April 7th for MSMEs to come and apply for grants. So what do you have to say about that? And then if we take from that place, looking into the issues that some of these banks have with working with maybe small businesses, how do you think we can be able to navigate? Do you think there are issues there, or do you think that we have good structural that is there that could assist them to actually get these funds, and it will not just be one of those headlines like we always see?
It's difficult to predict what people will do. Unfortunately, some people among the people government is trying to help might see it as a national cake. They will take these monies and, will not repay, like we've had with previous intervention programs. But government still has a role to play to drive more formal businesses, make more businesses become formal. Because one, the more formal a business is, the more likely they will pay taxes to government. Now, one of the things government can do with this kind of program is to ensure that every beneficiary or applicant, they can funnel them to CAC and say, let's get them registered. Let's push them to be registered with FIRS and have their tax ID so that we can track what they do. Let's get them to file their accounts as at when due. Now, with that structure, over time, you find that these businesses will no more depend on intervention programs. Maybe for now, intervention programs will suffice, but going forward, these businesses will grow a bit more with this funding and will be able to access formal commercial lending from banks, microfinance banks, and the likes.
Okay, now we are seeing multiple interventions, like you already mentioned intervention, like I talked about the 1 billion naira that the federal government is trying to push to them. We also have $750 million for electricity access, digital economy funding, but we often have implementation problems. It always feels slow, and it's almost looking like it's disconnected from the impact. Now, I want to ask you, do you think that this is a coordination issue, or we are simply not targeting the right pressure points in the economy?
Coordination, yes, to some extent. The coordination might be lacking a bit, but also structurally. So, for example, you want to fund metering, for example, like the $750 million. You want to fund metering. It's important to fund metering so that you can ensure that monies come back to the discos, and discos can pay the gencos for the power they are supplying them to distribute, and gencos can pay the gas suppliers who give them gas to power their power plants. Now, all of this is good, is perfect, but you also don't forget the fact that even if you meter everybody, not everybody has the capacity to pay for power. Economy is biting hard on the people at the lower rung of the economy. So I think one of the things government needs to do is also look at a willing buyer, willing seller model, where if particular company, because we have companies that are running on their own power that could be buying directly from these gencos or discos. If we can do that, it will make the system more liquid. So if a Dangote cement is running on maybe 500 megawatts or a Dangote refinery is running on 500 megawatt power plant of their own. If we could transit them to use the grid, they would be buying directly from the grid. The money they would pay would help improve liquidity in the system and would help the Gencos and all of them survive better, because you find a situation where power is supplied to discos and discos are not able to remit back full payment because they find that maybe in the area they cover, maybe only a section of them are regular payers, and you find a lot of theft, you know, people tapping power and all of that. So I think that's one of the areas that needs to be sorted out. There's a disconnect, and also we have a challenge with the transmission company of Nigeria. The capacity to transmit the power being generated is weak. That portion was not liberalized by the federal government. It was not privatized. So you privatize the Gencos, you privatize the discos. At the middle, where you have the transmission, government controls it 100%, and there will be inefficiencies, as you well know. So a decentralization of transmission also will help that sector.
Okay. Even though we had the Minister for Power say that, you know, they're already on the part of decentralization in the electricity, but let's just draw the curtains on the headline reviews, and we'll be coming back shortly with a more interesting conversation around investment, where you should put your money, how you should utilize the opportunity that this economy is presenting to you. I think the question is this economic situation currently a signal or a warning? So do not go anywhere. We'll be right back. Stay with us. My name is Divine Alex. You're welcome back. This is still the Business Lens from Rapid Television, Abuja. My name is Divine Alex. Like I said, we'll be discussing the topic investment in equities for emerging investors. And the question I asked earlier, is this economy a warning sign or an opportunity for you? And I'm not alone, because I have with me an investment analyst Kelvin Ehalufo. I hope I'm not murdering this name. So we've been doing this together, and then in today's economic climate, many Nigerians are asking the same question. Is this a time to hold back or a time to invest? With possible rise in inflation because of the whole tension from US, Iran, and Middle East. We also have currency volatility and shifting global markets. The rules of wealth creation are changing fast, but within this uncertainty also lies opportunity for those who understand where to look and how to position themselves. Now, we can go from stocks and real estate to dollar-based assets and global opportunities. Today's conversation is about helping Nigerians move from survival mode to strategic investing, no matter their income level. Now, this is where we are going to be having this conversation. That is why I said you're going to, you know, go home with something jotted down somewhere. So let me come to you, analyst Kelvin. What do you make of this economic situation? Do you think that this is the perfect time to invest? How would you describe the economic situation right now?
I would say that it's quite a good time to invest. And the truth is, there's no time that is ever going to be a perfect time to invest. And so if you look at investment, there are two sides to it. When people are running away from the market, it's actually a good time, because that is the time when stocks are usually low priced, and it's the best time to buy in when the stock is cheap, and when everybody's happy, when the sentiments are very good, stock prices go up and then you sell. So that is usually the smart way to invest. But if you ask me, considering where we're coming from as an economy, there was a time before this administration came on board, government was owing FX backlogs of about $7 billion claimed to airlines. There were a lot of challenges in the economy. A lot of those have been resolved now, and the economy is stabilized. We had a very low foreign reserve position as an economy, and today is about $49 to $50 billion. So we are quite in a good place. It could be better, and we hope it gets better. And with the increase in oil prices, we hope we can take advantage of this to grow our economy and reduce the budget deficit, which also will strengthen our Naira. So with Naira appreciating in value as it is today, I think it was around 1,380 something yesterday. Yes. Considering where we were coming from 1,009 at one time, I think Naira assets are doing much better than dollar assets right now, if I was to advise anybody.
Okay.
If you hold any investment in dollars right now, a lot of them are basically at the same level, not much difference. Some of them have even, depreciated. Gold has gone down. It went up before the war, when the war started. It hit $5,100 dollars.
Yes.
Now it's about 4,100 to 4,500 band. So the world has moved back, and people are looking at, should we go into dollar investment? Should we go into Naira investment? But if you ask me, looking at the results from Q1 alone in this year, the NGX, Nigerian Stock Exchange, has made a return of 29.4%. That means from January to the end of March, stock generally, the average prices have increased by 29.4%. Inflation in Nigeria is still around maybe 16, 15 or thereabouts.
Yes, 15.06
so when you look at it, the stock market is doing better. The returns makes you to earn more than, so whatever money, if you keep your money in Naira and you keep it in the bank, depreciation, the loss of value, inflation is eating at that money. But if you put that money in investment, Naira investments, since January till the end of March, you would have made 29%. So you would have beat inflation. So if I was to advise anybody, I think Naira investments are doing better than dollar investments, even than gold right now, if I'm not mistaken.
Okay, now for someone who has ever, only ever used savings account, how would you describe to this person about equity investments in the context of the Nigerian exchange?
Yeah, so I would advise whoever, maybe if you're a first timer, I think reach out to a stockbroker. Reach out to a stockbroking firm. There are quite a large number of them. If you go on the Nigerian Stock Exchange website, you'll find a list of stockbrokers. And from their stockbroking names, you can find their addresses, their locations. You find them all over the country. You find them in Abuja, in Lagos, in different places. So find the one that's closest to you. Walk in there, have a chat with them. These days, they can put you through. And a number of them now, for example, like on my own phone, you have stock trading apps where you don't even leave the comfort. You don't even need to make a call. Once you fund your account, you can pick stocks to invest in, And for a fresh person who is not quite savvy, I would advise they go for big name stocks that are doing very well. The likes of MTN, Dangote, Cement, those well-known names, the banks, Zenith Bank, GTB, they are doing well. Unilever, the big names, those are the safe bets. I wouldn't advise anyone who is new to investments to go for penny stocks. And what I mean by penny stocks, any stock below 5 Naira in value, we consider them penny stocks. Those are usually a bit volatile.
How can they identify which of them is the penny stocks?
Yes,
because
that's what
like
I
we
just
said, because sometimes when people go to make research about I think there was a boss towards the end of last year and beginning of this year. Oh, go get shares, go do this one, invest, put your money here. As low as 5,000 Naira, you could buy one or two things and it is going to give you money. And then some people go and do research. Some people go to run to all these AIs to ask questions, use Google. But then they don't even know the perfect one to even go into. They don't know where to even put in their money. And I think I had someone like that too. So now, how do they identify where to go to, how to navigate, so that they would know that, oh, these are penny stocks. You don't put your money here if you are a novice, if you are a newbie, so that going forward, they will know how to be able to navigate. Maybe when they have plenty money, they can start considering the penny stock just to, have more investment in other places. So how do they identify it?
So like any investment, it is not good to go in with the short-term view. Like you find on social media, people telling you, come and invest within a short period, your money is going to multiply and all of that. That's not the way to look at investment. It's best to look at it with somewhat a long-term view. So do not invest in any company, any stock or any shares of a company that you do not believe in long-term has the high growth potential. So for example, you look at a sector that is very impactful on every one of us, the telecommunications sector, for example. There are few companies listed in that sector. You have Airtel Africa, you have MTN Nigeria. So if I was a layman and I just wanted to do my analysis, my question would be, which one has broader reach? Which one do I know more people use than the other? Then that is at the layman level. Then the next thing will be, can I get my hands on their financial reports? And if you go on the NGX, there is portal. On that portal, you can find reports regularly being submitted by these companies, quarterly reports, maybe Q1 reports for 2026, or even previous one that gives you the financial history. So if you look at the last results released by MTN, I mean, the fantastic results, 1 point something trillion, you know, the heavy investment they also made last year, about ₦1 trillion. All that will point to you a strong company, a liquid company. Okay. You know, you also look at, is this company heavily leveraged? So when we talk about leverage, I mean borrowing. So if the asset or the equity of a company is 1 trillion, for example, and you check his book and you find that it has borrowed maybe 20 trillion. That means you have a leverage ratio of 1 to 20. That is extreme. You should not go beyond maybe 1 to 5, 1 to 4. That's usually the standard, the gold standard. So those are things you look at. How leveraged is this company? Then once you go beyond that, then you now look at what we call the earnings per share, which is you divide the profit after tax of the company or the profits for the year by the numbers of shares that have been issued by that company. So, for example, if the earnings per share, I mean, the profit after tax of a company is 10 billion naira, for example, and that company has 1 billion shares that has been issued, you just say 10 billion divided by 1 billion, you have a earnings per share of 10 naira per share. Now you look at the price of that company on the stock market, and then you look at it. So if a company is going for, say, 100 naira on the market, and its earnings per share is 10 naira, it's still relatively good. You know, it means within 10 years, if it goes at that rate, that same earnings per share, within 10 years, you could make your money back, or, you know, if they paid out all of that earnings to you as dividend. So there are many ways you look at it, the dividend payout ratio. There are many things you look at. So for some companies, they may be making money, but they don't have a history of paying out dividends regularly. And even when they pay dividends, maybe out of the earnings per share of that 10 naira, for example, that company only is willing to give you 1 naira. So investors will run away from such a company and say that company is stingy. But look at the likes of GT Code that just released his results. How much was his earnings per share? And he paid, and is announced to pay over 11 naira per share. Now, 11 naira for a company selling at maybe 120 naira or around 120 naira is quite huge. That means you are earning in 1 year about 10% of the share price. And a year ago, that company came to the market and sold shares at 50 naira. So already the share price has doubled within 1 year, and they are still giving you about 11 naira dividend. So bumper harvest for such investors. So those are the things a new investor should look out for. Is it a dividend paying company? How leveraged is it? What is its earnings per share? Those basic things. Is it well structured? Are they liquid? What is their market share in the business they do? So if you go into cement, for example, you look at the big players, WAPCO, Dangote Cement, Bua Cement. Who has the largest share? We all know it's Dangote Cement. You know, those are the things you look at. How profitable is it? Dangote Cement is not just in Nigeria. It's in a number of countries on the African continent. So if you buy Dangote Cement shares, you are investing in Dangote Cement across Africa.
African countries.
Yeah, so those are things you look at. Does it have a regional play? Is it just limited to Nigeria? So what if Nigeria's economy goes down? You'll be covered by the profits in other African countries. So if you look at banking, you have some stocks in Nigeria that have presence in other African countries. Access Bank, UBA, EcoBank, GTB. You know, those are things you should look at. Should this economy tank for any reason, do we have anything to fall back on? But if you invest in a company that is just limited to one jurisdiction, if that jurisdiction has an issue, which can happen at any time, then you find that all the stocks who are just limited to operating in just that jurisdiction, we have a bad time for that year.
Okay, so I wanted to ask, I wanted us to talk about dividend yields, but before we get to that, I want you to, because a lot of people say, oh, investments are only for the wealthy. They don't know that it is not just for the wealthy,
Yeah.
right? But I want, because you now as an investment analyst, when you tell them, you would, break it down for them to understand how this works completely. Now, is the Nigerian stock market only for the wealthy? What is the realistic minimum amount someone needs to start their investment journey today?
If I'm being honest, I don't think there's a limit because you have some stocks that are going for maybe a 1 naira, 2 naira.
Okay.
So if you just buy 100 units of that, you've not even spent 1,000 naira. So if you have 5,000, you can invest in the stock market. You can, but I'm not saying because you have 5,000, you should go and buy penny stocks, because penny stocks are those stocks maybe from 5 naira and below in price. I would rather, if you had 5,000 naira and you see maybe an MTN who is currently going at maybe 760 right now on the market, buy 7 units of MTN. You might make more from just 7 units of MTN than if you go and buy 1,000 units of a stock that is selling at 5 naira. So
Okay.
it is about the value proposition. What do you get from that company? Is that company likely to appreciate in value? Is that company going to pay you dividends? Have they had a history of paying dividends? Is that company very liquid? Is it a company that generates income? Because when you look at their turnover, and you look at MTN's turnover, and you look at Zenith Bank's turnover, those are very liquid companies. They make a lot of money. But there are some companies you will check on the NGX, you look at their turnover, is nothing to write home about compared to the scale of their operation. They are not doing too well. And if you go for those companies, they will most likely be the cheaper stocks. And then you get your hand burnt. Maybe you buy it at 5 naira, and before you know it is now 3 naira. You've lost 40% of your value.
Now, many Nigerians, right, many Nigerian investors prioritize dividend yield.
Yeah.
Now, can you explain the difference between buying a stock for dividends and versus buying for capital appreciation?
Yeah, so dividend yield is basically the dividend you get at the end of the year divided by the share price. So, for example, a company is selling, the stock is going on the market at 100 naira, for example, and it pays you a dividend of 5 naira. So you would then say 5 naira divided by the 100 naira gives you 5% return, dividend yield. Now, you could also look at capital appreciation. That same company, you bought it at 100 naira and it appreciated 20%. It's now 120 naira at the end of the year. So you say, oh, it has given you capital appreciation of 20 naira. Now, different people with different outlook. But if you ask me, the smarter way to invest, even though dividends have their benefits, the smarter way to invest is actually the capital appreciation strategy, where you are, of course, you will take dividend when it comes, but the aim is actually to grow your portfolio, the value of your portfolio. So you put in 100,000, you want to one day see that 100,000 become 200,000, 300,000. So that is the capital appreciation route. It's not very likely that you put in that 100 naira and they will pay you a dividend of 100,000 that same 1 year. But capital appreciation is possible. You find some stocks that have grown 300% in just few months. So I'm not saying that you should be expecting that high capital appreciation, but it is possible. So the faster way to grow your wealth is to target capital appreciation. But alongside, you should also be looking at, oh, that company will pay me dividend. But the main focus is growing your portfolio value.
You know, when you just talked about the fastest way, it just took me back to the Ponzi scheme.
Yeah.
That's also capital appreciation, because I'm sure some people could mistake it. Is there a way for us to differentiate between, stocks or investment plans and opportunities that could take them to capital appreciation without falling victim of the Ponzi scheme?
Okay, so a Ponzi scheme is basically a business that doesn't have underlying numbers. They are not transacting. So it's basically, bring more people into the scheme. You take money from A and pay B. But after a while, you will get stuck at maybe when more people are not coming on board. So you have some people that you are not able to pay, then it collapses. That's what you call a Ponzi scheme.
Okay.
There's no underlying business. It's different from an investment in the stock market, because all the companies listed on the stock market have strict regulatory requirements. They need to share their accounts details, their operational details on the market regularly. So the SEC, the regulator, the Securities and Exchange Commission, monitors the activities of those companies. The Nigerian Stock Exchange monitors the activities of those companies. There's look at even their corporate governance. So it's quite different.
Okay.
If you're investing on the stock market, you should be investing in the future of those companies, what you know about those companies. So it's as simple as, okay, for example, a company produces the liquid you use to wash your plates at home. I don't want to mention a particular brand name, but you know the liquid I'm talking about.
Yes.
Yeah, you know that particular brand name. Now, if you look at it, you check, you find the company name, and you find that that liquid is being used by almost all the women everywhere around the country. So that tells you that that company is making a lot of money from that product. There are some products we all know that a lot of people use. So, for example, imagine if Apple was a Nigerian company or was listed on Nigerian Stock Exchange. You and I know almost every lady in Nigeria uses an iPhone.
Yes.
Apple wristwatch and all of that. So that will tell you that they are making a lot of money. So if you go on the US Stock Exchange, you will find that the Apple stock is doing very well, for example. Now, if you look around us, you will find in our everyday life, there are some things we use that is widespread. Everybody uses it. Okay, it's a no-brainer.
So a quick one. Would you say that this economy is a signal or a warning? In one line.
Yes, it is a signal. It's not a warning. If you ask me, I think this is the best time to invest, but invest wisely. Invest wisely. Get a financial advisor.
Do you have anything else you want to add? I wanted us to have a robust conversation, but we'll have to pick up on Monday because our time is almost over. Yeah. And this investment, I know that there are lots of dynamics because we have to look into some other aspects. We've not even talked about different sectors and the investment where people can actually look at. So which means that we could talk about it on Monday so that we could have, cover all of these gaps. But now, do you think that there's something from the areas that we've been able to touch that you want to chip in something so that anybody who is just watching us right now would know that, okay, this is just the way, at least for a start, we could just start from here?
Yeah. So if you ask me, looking at the economy right now, government's focused on infrastructure, so cement stocks are a good one. Okay. The central bank just concluded capitalization of banks, so banks are going to be deploying those funds, mopping up more liquidity. They're going to be making a lot of money. So bank stocks are also a place to look at. So I'll stop there. I won't give too much away. Okay. We'll continue on Monday.
All right. Thank you so much for being on the show today, Analyst Kelvin. And at the end of the day, building wealth is no longer just about how much you earn, but how well you position what you have. And in times like this, the real question isn't whether to invest. It's about whether you can afford not to invest. And this is how we wrap up the Business Lens on Rapid Television today. My name is Divine Alex. Do not forget to stay with Rapid TV. Bye for now.